Welcome to a capital hungry breakdown of GBPCAD. So we're going to be looking at the higher time frames down to the intraday time frames, talking about the fundamentals impacting both the British pound and the Canadian dollar. I just have a few points listed out. I've already started mapping out some of the key levels using the candle body conjunction points on the yearly. And we're just going to go down the time frames, talk about the sentiment and any trade ideas we can take advantage of here. So first things first, we know that this is a risk currency versus a risk currency. So you really want to start looking at the individual aspects that are impacting each currency's respected economy and or country, of course. So with that being said, when I was looking at the Canadian dollar, I've noticed that, of course, the Toronto Stock Exchange, the Canadian markets are still staying solid. Oil is still fairly bullish, around $40 a barrel and above. And the Bank of Canada has been fairly neutral. On the GBP side, there is a potential for a lot more there's a potential for a lot more liquidity inflow into that currency due to any good trade talks that can come between the UK and the US, as well as the UK and Euro. There's been some more support from the Bank of England, and we've seen stronger rebounded data as well from GBP compared to Canada, as well as per leaders for each country. Trudeau has been fairly quiet and or useless in my opinion, where Boris Johnson is a lot more active and giving a lot more optimistic speeches and sentiment support for GBP. Respectively, both markets are strong for each of these countries and currencies. Like the FTC 100 is solid for GBP, CAD's TSX is solid, and both have had some strong rebounds after the March COVID crash. So it's hard to gauge which is exactly stronger, but looking at the market structure and how we are at historical low points still, and have had several failures to break previous lows. You can see the bullish structure I have marked out. This failed to break previous low. So first thing I want to talk about is the bullish structure, of course. Then when we had this massive pump up move to retest these candle bodies in order block area, you can see we had this huge impulsive sell-off for the year during 2016, but it failed to close below previous lows or break previous low candle body levels, right? Since that point, we've had some minor corrective action so far in bullish structure form, where the previous year, it had a very impulsive move to the downside that failed to break previous wick lows as well as candle body lows again to the left, filled a good portion of that seller's range, and also the candle body of itself closed above these two levels here where you're looking at these previous bullish candles. We can also see with this year, we've also come down to test that bullish market structure. These candle body lows failed to break and hold bullish structure, as well as partially wick fill, around a 50% wick fill of this bearish wick here, okay? So we've already grabbed a lot of liquidity and have a lot of liquidity generated from the downside in buy orders, in my opinion, where if we get any signs of further GBP data rebounding or any confirms of one-sided volatility, let's just say that GBP data continues to stay solid. We have that Bank of England support, as well as there's good trade talks between the US and UK, as well as the UK and Euro. And oil falls below $40 a barrel and starts to weaken from its bullish market structure and relieve some of that CAD strength. We have that momentum and order flow, in my opinion, to come revisit some of these highs and fully fill this bullish wick range here to around 1.84215. Okay, where just from current price point up to there alone is 1,000 pips. So that's just what I was looking at as per some of the structure and mapping out some of the key levels and just some of the key main macro fundamental points I was also looking at. Respectively, both countries' inflations are nothing too spectacular. It's just GBP has had a bit of a stronger rebound in data and more support fundamentally from their political leaders and central bank respectively as well. When we go down to the quarterly chart, I'm just going to map out some key levels. But you can see when we had a previous very strong bounce here, we had liquidity generated for months and failing to break previous lows in candle body lows, right? If we're looking at some historical repetition, we can see that liquidity being generated here, price failing to break previous lows to the left, showing me there is that potential for extension, especially as we're starting to break this little minor resistance to the left and we have that potential to come revisit these candle bodies as well and come into a bit and correct more of this downside move and have this bit of historical repetition, right? And also just from an investor very macro concept is buy low, sell high. So when you're looking at the chart from a very zoomed out perspective, this is quote unquote very appealing low points to buy for GBPCAD, especially if we have closures above some of these key levels. As you can see, we have that potential for that history repeating as we failed to break these previous lows, and we can come correct more of this downside move. You can see we have this downside move that was identified on the yearly that failed to break those lows, and now this liquidity most likely will correct that move and create that mirror. Very similar to when we had this downside move here. So it's always good to break down the market in that fashion and understand the macro view and know what you need for both sides as well. But I'm going to continue to map out some levels using these 3-month candle body conjunctions. And of course, for long-term sells, we would really need to come below 1.65720. I'm just going to map out levels. Oops, don't mind that. A lot of these levels will be fairly similar to previous levels, but of course, that's the whole basis behind this concept. So you can see we're just zooming into some of the price action now in the quarterly period, and we'll identify this better in the monthly, that we are breaking above and correcting this downside move after failing to break previous lows and seeing some more support from the Bank of England and bullish pressure for GBP as well. The 1 month is better defining this move as more of like this was more identified as a liquidity grab in my opinion. And also after this low point, you had price come test this previous high, right? Not have enough order flow in the market or juice to break this previous high in historical resistance, and now coming down, creating this higher low in the base, developing some bullish market structure where this monthly candle has already created a lower wick and grabbed some liquidity. So if we can break above 1.6, 1.62 or retest some of these key levels on the weekly or daily and remain above it, I see that potential for upside to fill these wick ranges and correct more of this downside move we can take advantage of here, which would be a great run if we can call this early here with all this liquidity that has been generated that we were identifying on the yearly and quarterly chart as well. So going down the time frames, we have some nice key levels mapped out. We're just going to see how they've been respected so far. The higher time frames from the yearly, quarterly, and monthly are looking fairly bullish so far. So once we see how our levels have mapped out, we'll look at the intraday charts and look for potential probable trade ideas with everything going on. So we'll just watch how the last like 3 months have played out, or the hourly chart. I'll of course round these levels off afterwards, but yeah. Already you can see very nice reactions to these key levels to use as guide points. Some of these ranges can be better divided up, but because GBPCAD is a pair I don't necessarily scalp or look to trade day to day, I want to keep these ranges fairly higher time frame, just so we can more swing this pair, as we've been calling, like very large pip range plays on this, like 500 pip buys is like the last call on GBPCAD. So okay, so these key levels are being respected fairly well. We're looking bullish on most time frames. I do see the potential to come retest this high. We just want to note where we are rejecting are these previous intraday high points as well. And what we're looking like is like we had this pullback completed so we can get some more order flow generated in the market. And it looks like we're going to come revisit that high and continue up as we are overall very bullish in market structure, and a lot of this liquidity has been generated for upside liquidity. We have that Bank of England support as well for the UK short term, as well as some more optimism via Brexit. I like this order block area here. Just from intraday, if we get that deeper pullback to here, it'd also be a nice level. I'm just going to round off some of these levels, and then we'll come back to this time frame and look for these potential trade ideas and give us some ranges to work with on the upside as well here. This would be ideal if we got a pullback to retest, but it seems like we already had that here. That happened here. We have had a very strong high peak. I'm just cautious about where we are rejecting at these previous high points. As if you can see, we zoom in at some of the price action here. Even when it's had some pullbacks, it started to end up failing to break this previous high. So we might need more liquidity generated from a deeper pullback to around 1.717. But I do like this liquidity that was generated here and how I'm looking at, of course, this is where we had the last impulsive move where we took advantage of, which is around 500 pips. The downside move from since then was around 280, so about a 50% correction. So this is a very, very nice pullback so far to correct a lot of the upside move and get more buyers into the market to have the order flow to break to the upside. So with that being said, I would start to look for buys above this medium term zone here. Actually, buys safest would be above 1.757 to fully correct this downside move, or if we get another pullback to this point. Otherwise, I can see this happen if we come back below. And then run up to the next range. That'd make the most sense to me. Might have some reaction here at this previous peak high point where we had that rejection, but other than that, and this is more like a medium term zone. I'm just going to label it off there. It gives us more to work with and areas to watch for reaction. A lot of these areas are still like 40 to 50 pips on GBPCAD. But yeah, I would only look for that potential sell play if we broke below this little area in our key level at 1.747. You can have that exhaustion and sell play down around 200, 230 pips to retest that previous broken zone where we had that impulsive play, as well as get better buys from this deeper bullish structure retest and still remain bullish on the higher time frames. This could possibly be a weekly lower wick for next week or the week after. Otherwise, I'm looking for safe buys above 757. And I would only look for deeper sells below 717 and any negativity to specifically impact GBP, such as seeing data fall off or anything that heavily impacts bullish pressure on the Canadian dollar, such as seeing like oil go to like $50 a barrel. We're pretty much coming to a close this week. We have the Canada unemployment change, which is important to watch, as well as the Canada IVPMI. That can possibly give CAD some short-term strength and give us that deeper pullback or come retest and hold 1.74 for better buys, or it's just safer to look around 1.757 because then you're at least going to revisit this high point, which is probably like 100 pips up, and then break out to possibly create a new high if there's enough order flow and liquidity in the market and one-sided volatility.